Welcome back to my channel. And today we're going to talking about Chapter 11, non-current liability. So, basically we learn about bond. So bond is the non-current liabilities obligation that the company expect to pay more than 1 year. Remember that this is an obligation. Okay. So here we're going to learn about some feature of bond. So bond basically is a form of interest-bearing notes payable, and a public company can raise a long-term capital by issuing ordinary share or bond. We call that as like debt security. So a bond is a contract between the borrower, borrowing company, which mean the issuer, and the lender, which mean investor. And the borrower promised to pay a specific amount of interest at the end of each period. The bond is outstanding and we pay its principal at the maturity date. So there was some advantage and disadvantage of bond. The advantage is shareholder control is not affected, and so bondholder doesn't have the voting right, and the shareholder is the fully control of the company. Second is tax saving result, and then is earning per share may be higher. And the formula for calculate earning per share is net income divided by number of shares outstanding. And the only disadvantage of bond is the company must pay interest on a periodic basis. In addition, the company must also repay the principal at the due date. And the second thing is the type of bond. There was two main kind of bond is security and secure and unsecured bond, and the second one is convertible and callable bond. Okay, so about secure bond is basically is a collateral for the bond, and unsecured was is also called debenture bond, are issued against the general credit of borrower. Normally, company with a good credit rating will use this bond extensively. And about a convertible and callable bond, convertible, like its name, convertible, is maybe converts into the ordinary share at the bondholder option. So this conversion feature generally is attractive to the bond buyer. The second thing is callable bond, as its name. You may think that yes, it's maybe redeemed, which means buy back by the company as a state currency amount or call price prior to maturity. And there are 4 elements of bond. This include principal, which have face value, face amount, par value, maturity value. Second is contractual interest rate, state rate, and nominal rate. And it's usually expressed on an annual basis. Remember that. The third one is interest payment day. Determine the interest follow the compounded interval. The last one is maturity day. This is the day which a bond principal or face value is repaid. So about bond trading, the bond trading can be by issuing a bond or trading between investor. And the bond value market price will equal for periodic interest plus principal amount. So for the present value of an annuity, an annuity is the series of equal amount to be received or paid at the end of equal time interval, and the present value of annuity is the value today of a series of equal space, equal amount payment to be made or received in the future given a specific interest rate. So how to compute the present value of annuity? We need to know the interest rate, number of interest periods, and amount of the periodic receipt of payment. Okay. Yes. So you can use the table to search for the periodic and the interest rate. And the table does have two sides, so please use it carefully. Okay, so let's go to the last one, which help you to double check that whether you using the wrong or the right calculation. It's about the contractual rate and the market rate. This two rate is determining whether that bond is premium or discount or issue at face value. So we will take a look at every question when it's have contractual rate is higher than the market rate. So we have to think that this one is bond premium. If contractual rate is lower than market rate, we have to remind yourself that this is the bond discount. So an example is that what if its contractual rate is 12 and the market rate is 14, so which means this is a bond discount. But what if the contractual is 14 and the market rate is 12, which means this one is issued by premium. Okay. Thank you for watching.